thanks for coming on the pod, Nick.
My pleasure. Delighted to be here. Thanks for inviting me.
Of course.
Very kind.
I think we always like to kick off with a bit about your journey.
Okay.
Starting in consulting, moving into gaming, VFX, founding your own businesses.
Yeah.
So yeah, maybe talk us through the exciting bits and the not so exciting bits.
Well, so let's skip the non-exciting bits. So yeah, I mean, look, I think you asked the question of did I ever sort of set out with an ambition to be an entrepreneur? And I would say that I would class myself as an accidental entrepreneur. Like I don't think there was ever a life plan where it was you're going to start your own companies, plural. And actually I was bribed at the very beginning. Like I was a school kid and somebody came in, and I'll put the numbers in pounds in today's money, but it was literally like this consulting company. We're going to pay you 50 grand a year as this is you're 18 at school. And we're then going to give you 10 grand to go traveling around the world in your gap year. So of course, any person who was talked to about that, when the alternative was earning, £4 an hour or whatever, delivering newspapers, I jumped at it. And that was clever brainwashing on their part, because I didn't even think about interviewing for anything else after uni. I was utterly indoctrinated.
And which uni did you go to?
Bristol. Yeah.
Nice.
I then thought when I came back, consulting was the bit that was most interesting. And basically, I got lucky. I got given, it's quite funny actually in hindsight, I got 2 startups. So normally consultancies, they're too expensive to work on startups. To put it in context, these were 2 startups that were both given £150 million, right? So they're unusual startups, right?
Are you a startup at that point?
I mean, they were, well, I'll tell you, because it's a funny story. One of them went bust, completely incinerated, down in flames, having spent 150 million quid. The second one did really, really well. The first one was this thing called British Sky Broadcasting. So it was, we're going to put the internet over dial-up modems into your TV. So you can buy your Sainsbury's through the TV.
Right.
But this was when there was a 48K modem and it went, dialing up, and it just didn't work. No one had the internet plugged into their TV. That was the other obvious product market fit problem.
Bit of a timing issue there,
huge timing error. So they spent a fortune, went bust. And the other one was Virgin Mobile, which actually did really well. So my first experience was on this kind of crazy rocket ship of Richard Branson with parties in Namco in central London, and it was fun. Very cool. Like really, really good fun. And
so how old would you have been then?
I was 23 then. So that was my first job out of uni.
A cool job.
It was a pretty cool job. It was a really cool job. It was like he had 5 founders, if you like, co-founders. And it was, just sat in a room building a mobile phone company that everybody said was a stupid idea. That was the other thing. So as an entrepreneur, useful lesson number 1 is everybody was saying this thing with Sky, and Matsushita, and it's going to be an absolute success. And this idea that you could, with just a brand, build a mobile phone company, that's a stupid idea. Everybody was like down on it. And the exact opposite one happened. Like the exact opposite actually turned out to be true. So as an entrepreneur, the first entrepreneurial lesson was you can't really listen to anybody.
So that was the first lesson in your accidental entrepreneurial journey.
Accidental entrepreneur. And then I was working on a VC. So the idea was, so if you imagine you're in the internet boom, .com boom. So in 2000, everybody wanted to work in a .com, everyone. And every management consultant was leaving to go and work for Starlight. So in my peer group, they went to Yahoo, to Ask Jeeves, to all these .com businesses.
Is there any parallels with AI now? Like, are you seeing that now? People wanting to join the AI boom, for example?
So interestingly, So I don't know that I've interviewed enough new grads to know the answer to that. I definitely think, so the thing that surprised me actually, and we were talking earlier about chief of staff. So one thing that does surprise me is how entrepreneurship as a career is even something that lots of people would consider doing.
Okay.
Because when I was starting out, there were like a handful of VCs, and they were all accountant firms, really, right? There wasn't really VC as you know it now, and starting a company was not something that most people did. Even in the early .com thing, it was unusual, and the mere fact that if you take my peer group, very, very few of them would be starting a startup. They would be joining an American one, Yahoo, whatever, that was launching eBay. Skype, I guess, is not, and Skype is a European one, but most of them were kind of big at that point, right? So I think a lot has changed in that 25-year period where younger people are more aware that they could actually do something themselves. They don't have to work in a corporate. There's more information on the internet on how to do it. There's more infrastructure in terms of capital. There's arguably more tools that allow you to start a company for nothing, really, really cheaply, really quickly.
Yeah.
Podcast studio, doesn't cost an absolute fortune. So I think all of those things give people a lot more opportunity maybe than they had when I was starting out. Yeah.
Okay.
So I actually ended up joining a startup VC after doing that, which was interesting. Floated. So I was an analyst, and I was the first, founding analyst, I guess. And the thing floated on the AIM, and we raised back then £10 million, which would be the equivalent of raising a first-time seed VC, probably £40 million now. Raised 10 million quid. And started doing investments, and funnily enough, the reason that I left VC and went into a startup that I actually invested in, so I was the lead, doing due diligence on this thing, was Mike Lynch, the guy who fell off his boat and died.
Yeah.
So when I was working back then, he was like a celebrated entrepreneur, could do no wrong, had this company Autonomy that was like the fastest growing business that we'd ever had in the UK, other than maybe the chip, what's it called? The chip platform, chip designer business that's now in the US. Anyway, it doesn't matter. He said to me, so I was trying to sell him a business from our portfolio. As an investment that they should invest in, and they were doing natural language processing. So there was back then.
Yeah.
So this was 2001.
Wow.
Yeah. So their whole business was a sector of software called knowledge management, and it basically was machine reading documents using NLP and trying to allow you, say, to go and type in, I'm interested in, I don't know, yak farming, and it would go, I've got exactly the article for you, and it would bring it in, right? So that whole very early knowledge systems part of which ultimately led to a lot of the AI stuff that we have now. But he said to me, if you're going to be a VC, you've either got to be a complete ninja on the spreadsheet, so become a deep financial person, or you've got to be a successful entrepreneur who sold a company so that you can actually give advice about building companies. You are neither of those things. I was like, thanks, mate.
Yeah. Okay. Now I have to
you
pick.
are neither of these things. Pick a lane.
Yeah.
So I'll credit him, despite the fact that he then got into all kinds of trouble and perhaps his reputation. I mean, who knows? Don't want to pass comment on that. But yeah, I went the entrepreneurial route and joined an AI. So it was a computer vision company, actually. So that is, using It was Bayesian statistics primarily, so statistical model analysis of video content. And that was crazy because when we made the investment in the business, it was a security company. So it was doing face recognition to let people into offices. So this is in 2003, right?
So basically you did all the startups that now exist back then.
Back then. Well, so funnily enough, there was no real sort of high-speed internet. So a lot of this, so it was all running on actual servers. So I used to, my demo unit was a massive, and we're talking sort of like that wide and about that tall, in the largest suitcase that you could buy at the time. And I used to wheel this server around because it was the only thing capable of running the code. And then it was connected to a video.
Yeah.
It's like, it was bananas, completely bananas. And one of the biggest challenges was a lot of our clients were in America. So we had to put this server on a plane, and then it would be like, is it going to make it? Or am I going to have to go and buy a new server when I was out there? So, and it was, so randomly it, on the sort of old journey of who is going to buy this, what is essentially a set of algorithms that do clever stuff, who's going to buy it? And their first customers were security companies. And I was like, well, hang on a minute. They described the technology to me. And I said, well, this technology is agnostic, right? It doesn't matter what you apply it to. So you can apply it to medicine, or you can apply it to, so all of the stuff that's in the media now, like using AI to spot cancer, like that stuff that I was, we were working on building. So we had a licensed product that was being used for clinical trials on osteoporosis drugs, right? So it was middle-aged women was the kind of core customer. And does this drug make the spine more or less clear? So in other words, is this drug actually increasing the strength of your spine? And you'd use computer vision to do that. And there were big companies at the time doing all of that. So I think what's different is that it was really expensive and a lot less robust because you didn't have the ability to run what you are probably running. You didn't have that ability to do that.
But the concept and the vision and
but all of the stories. So if you started it from fundamental level of stories, right? The stories at the beginning of the business. So I went to see Incutel, which was a CIA's VC fund. It was, can you spot terrorists in a crowd? Same story, exactly the same thing they're trying to do now. If you go to a hospital, it was, can you spot cancer? Can you detect, this thing earlier than a radiologist might be able to do? In animation, it was, can you take this actor and create a photoreal video that looks like them but isn't them? So every single use case, pretty much, certainly on the visual side, there wasn't one for, can you unlock my phone by looking at the camera? But most of them were, are still, like, I'll give you a good example. Some of the guys I worked with back then are now in Epic, a video game company that makes Fortnite. So they're now the R&D team in Epic. And they're working on the exact same performance character. How do you build a believable video game character that can make someone cry, laugh, smile? Working on exactly the same thing they're working on 20 years ago. That blows my mind.
Yeah, that's crazy.
It is crazy. All in the pursuit of getting to the metaverse, which has now been cancelled.
Yeah, we don't talk about that anymore.
Don't talk about that anymore.
But talking about stories, tell me about the Tandem Bank Mafia, as I'm starting to call them. We've had Matt on the pod before, and we speak to a few people that were at Tandem. So
and
welcome.
It's well, look, I think what if you happen to be lucky enough to be in a company that grows to the hundreds of employees, I think Tandem's now 400 or something people, and is profitable and everything else, then you you spend a lot of time with the people you work with. And that is for good or bad. Some of them you might not ever speak to ever again in your life, nor might you want to. Others you form very good, close, relationships with. And I think, and also some of those people will be meeting, if they were on the C-suite of the business, they're often meeting with all the shareholders. So to be honest, it's all like many things in life. It's you building relationships over a period of time. You told me your founding story. That's a story of long-term relationships over time that get you into place, ultimately give you a level of trust that you wouldn't have with a random punter off the street. And so, it doesn't really surprise me. I mean, I saw something about, 20 odd companies that have come out of Revolut. You've got Tandem people in Zopa, Moneybox, Revolut, Prosper, you name it, lots and lots of places. That's really not that surprising, given it's ultimately human capital and people, as long as you were good, you're going to either be hired by, or you're going to, if you're really good, you're going to start your own company, and you're probably going to be leveraging the connections that you had before.
Which is what you and Ricky did, right?
Yeah, definitely. And if you're, if you're on the really successful end, then you might actually start seed, angel investing in your former employees, which is something, that I think actually, in terms of Tandem founders, and you include Mike Kent in that as well, they probably, as a group, probably funded maybe 30, 40 companies of Tandem people.
This whole portfolio.
A lot.
Yeah.
A lot. And these are only like, 5K, 10K angel checks, but it matters. If you're trying to build any kind of ecosystem, we want to build as vibrant an ecosystem as we've got in the States. They have a massive advantage that they are at least 20, if not 30 years ahead of us. And by that, I mean, if you look at who were the pioneering venture capitalists in what year versus here, the equivalent would probably be 3i. 3i is a good 20 years, I think, younger. So that's the first. So we have got, again, and this is because I'm now wired into compound interest my entire life, it's about compounding. But if you think about money deployed, jobs created, successful founders who sell, who then create the next wave of companies, they've got a good 2 cycles, if not 3 cycles of the entire thing more than we've got. So our job should be, okay, well, how do we hack what it is that they have done to compress that amount of time? How do we make the UK successful faster, leveraging what they already know?
Do you think it'll always be a catch-up game if we're 2 or 3 cycles behind, or do you think the UK, with the right policies or whatever it might be, could hack that system?
I think they have. I think it would be really hard for us to hack the system for one reason only, and that is that they have a gigantic market, with no barriers to selling. Right? Whereas the barriers to, I don't know how hot your German, French, Italian, Spanish, don't know how hot your lingos are,
Not
but
great.
that's a huge advantage, right? And one of the biggest challenges, that we have is, how do you stop an entrepreneur raising their scaling capital from the US? Like, how do you do that? Because, given the choice, keep growing your company in a market that has 60 million people, or go to one with 400 million people who also speak the same language, by the way. It's hard, right?
So when you think about Prosper now, I mean, maybe we'll go back in a bit, but just when you think about Prosper's future, is that a path, going to a much bigger market?
I think you have to. So if you're an entrepreneur, you're building today, and you're not building on a global problem with a global market opportunity, you should think really hard about whether actually if you're going for a venture style business, right? I think you can build a lifestyle business that is, doing whatever web design in the UK if you want, and there's nothing wrong with that, right? That's a personal choice about how big a company do you want to build, and also how big a company is required in order to have any chance of winning and not being squashed. That's the other side of it, because you could go, for example, I'm going to build a TV production company in the UK, but if all the big production money is just hoovered up by Netflix people in America, then you're not going to do very well.
Yeah.
So it's not a super simple question to answer, but I think in our case, what we're building for is a generational shift, a cultural shift, which is going to happen over the next 20, 30 years. That's what we're building for, which is, my parents' generation, who are boomers. Sadly, whether we like it or not, none of us live forever. They are going to be leaving planet Earth. And there are generations coming up behind them who are fundamentally different in how they live. They are born digitally native. So that, we're building for that, right? So that is not a UK only phenomena, right? That is, there will be differences. Like, I bet you any money that the hardest market to build would probably be somewhere like Japan.
Yeah.
Right, where there's a fundamentally different cultural thing. Maybe it'd be the easiest market because their generations are so tightly knitted. I actually don't know. I did go to Japan as one of the UK's video game ambassadors.
Okay.
At one point.
Quite different to what you're doing now.
It was totally different. And went to Metal Gear Solid's studios and went to all these crazy
But we could do a whole episode on your early escapades.
Yeah. Not as mad as Grand Theft Auto. That's probably the maddest. But anyway.
Okay.
That's a separate
episode probably.
Well, that one I was working on. The last video game I worked on, console game, was GTA 5.
Okay.
And it blows my mind that. So I was working on pre-visualization, which is like the step before you start actually making the game. So previs for what ultimately, was to become GTA 6. But that was in 2007. That blows my mind, because so that's 18 years. Some of the people that I know have been working on the same game.
Yeah.
For that amount of time. Bananas.
It is crazy.
Yeah.
It's almost like building a company.
I mean,
you need
more than building a company. Like, imagine saying to a VC, "Oh, we think we're going to take 18 years to exit." I mean,
or even ship.
Yeah, just to ship the first
MVP,
version.
Yeah.
Yeah, I don't think you and I would get very far, would we?
We wouldn't. But tell me more about Prosper. Why you started it? You met Ricky at Tandem.
Yeah.
So.
Well, no, I didn't actually. So my story with Ricky. So Ricky and I were uni mates.
Ah, okay.
So I'm kind of like you. This is a weird podcast.
Yeah, okay.
Because you got two childhood friends. Yeah.
Do you build with friends?
I met him when I was 18.
Okay. Wow.
Yeah. So
did you both know? Like, was he also an accidental entrepreneur? Did he want to do it?
So weirdly, we both did a very similar sort of path, because we both started in consulting, different ones. Both went into VC, and then both started companies.
Okay.
And except I went into video games, he went into financial services.
Okay. So yours was more interesting.
He would obviously say that who wouldn't say that money transfer is more interesting. So I've actually known him for a really long time.
Okay.
And obviously you would have thought about this a lot as well. Like, going into business, one of your better mates, best mates, is a big call, right? I mean, on the one hand, it's likely that you know that person better than most other people on earth. On the other side, what's more valuable to you? Is it your friendship, or is it, building a big company? I think, and it's very rare to find people who could do that, who could do the friendship and the company together and not have some moment where it doesn't work.
I think one of the myths is, you can't co-found a business with your closest friends.
Yeah.
I think in most situations probably, but when you find that other person who you can build something with, it works really fucking
really well.
Basically,
I think it works really, really well. And there are lots of examples of incredibly close co-founders, right? Plenty of them. And I think like anything, it ultimately does come down to people, right? You can never predict everything that's going to happen to you in the future, but you can. I'd known the guy for long enough. 20 years I'd known him for. So
there was that trust and understanding.
Yeah, and to be honest, I was. So if you go back to Tandem, so I was not feeling video games, because video games, I'd gone through, console games, then started doing online games, then started doing games on social networks, i.e. Facebook games, like everybody else, then did iPhone games. And then at the end, I was doing a massively multiplayer thing, like 10 million concurrent daily players. And the future of video games, as I was told at the time, was, and where all the VC money was going, interestingly, was VR and AR. And I was just like, and this was what, 2011, 2012, just didn't get it. I didn't see it.
I think people
and I still don't see it now, because I don't want to sit, it has a novelty factor, right? Everybody should try a VR thing, but it's like going to Thorpe Park.
Yeah, it's not an everyday thing.
It's not something I just, if you're human, you want to be with other humans, So I was looking for the next big idea, and it was actually talking to Ricky about what was going on in fintech. Fintech suddenly looked much more exciting, because it's really about the technology, right? So it was about turning financial, or giving access to financial data through an API. And that still will probably be the same thing I will say in 10 years, much like my Epic guys doing the same animation 20 years ago, 20 years on. I just don't think that we've scratched the surface of what that actually means. And that's largely because the incumbent banks did a really good job of killing the spec of open banking, like really reducing the number of things that you could do. Because why would they want to give away their data? And arguably now with AI, they got even less incentive to give away data if they view their customer asset as
something valuable,
as a moat
they own.
So I think we're going to be on. I think that's a long road, and Prosper really was born out of two things. One, a lived, like most entrepreneurs that you will ask, it's something that really annoys you, or that you would love to exist. Like you've either got to be really in pain, or you've got to have a massive passion for why something doesn't exist. Normal people will put up with the status quo, right? Most people don't want to change. If I said to you, oh, you can use your money, but you can manage your money on, I won't say a name because it's a podcast, but on a legacy investment platform. And, because they're old software, they might say that it's maintenance on the weekend and you can't look at your money, and all these other, and they won't let you log in with your face. You've got to log in with a rare, obscure, long string of numbers, and you can't buy these kinds of investments because they're too risk averse to even think about broadening. So there's a whole range of things like that. And I think those kinds of things were not acceptable to me. I was like, well, I need to have something better than this. And it needs to be because I am, frankly, trying to do the right thing for myself. I don't want, originally I got sent a pension statement that was from and I'd had 7 jobs or something by that point, one of them. And it was about $3,000 in fees. So I was like, well, hang on a minute. If I got 7 of those, I might as well employ someone. And what are these people actually doing for the money? Because I don't mind paying for things if I can see value in it. But I really couldn't see any value. And the software was dire and really annoying. And so that was enough for me to say, this is a huge market. And surely we can do better for the customer, both in the product, user experience, in how much money they can make. Because I was looking at all of these businesses and they were the most profitable businesses on the FTSE. It's not like, looking at, I don't know, even Amazon, 3% margin in the retail business. It's not like, these guys were a retailer. Let's be honest. What are they? They're retailers and they're selling you investments. But rather than making 3% like most retailers do, they make 50 plus. It's like mental. So I thought it was utterly insane, and that was enough for me to believe that you could go after a super profit industry like that and do better. And I also thought that there were some things like, I'm sure we'll talk about your AI. But there were some things that were just obvious to me because I've been living with various kinds of AI for 20 years that were going to happen. And my belief was, what's the probability that those things are going to be built by an entrepreneur who actually has experience for a long time building those kinds of systems, or even to recognize the opportunity versus an incumbent who probably won't see the opportunity because they've not lived and breathed the technology. And even if they did, see the opportunity, they're going to hire the wrong people. They're going to spend 17 years building it. It's not going to work. So I felt like there was a big sort of why now technologically with AI. There was a why now pain because everything that was existing was rubbish. There was a real why now generationally, because I strongly believe that the wealth manager that my parents had is not going to be like every generation before. You just used to go with the wealth manager that your parents had. I don't believe that we're going to do that.
Especially with AI, I think,
don't buy it.
Yeah. Do you think the threat comes more from early stage or new entrants then for you right now at Prosper versus the legacy banks trying to build it or do something themselves?
I think. So I am probably my experience over the do actually tells me that either scenario is possible, which is probably, as an entrepreneur, you go, heresy, surely the entrepreneurs will win. But actually, I'm pragmatic enough to know that, let me give you an example. When I was starting my first video game business, a lot of the VC-backed businesses that were building, so my first one was actually technology for animation rather than games for the end consumer. But all of the VC money was going into businesses that were making games for the consumer. And every single one of them, almost without question, was like, when you say, well, whose lunch are you going to eat? We're going to destroy EA. That was always the thing. Like EA was we're going to disrupt EA. Because EA only makes console games. They're old-fashioned, blah, blah, blah. guess what? Largest M&A transaction in the history of the world was EA like a couple of years ago. Certainly didn't go bust, right? Certainly was able to innovate and move on. So I'm not, I obviously believe great entrepreneurs will ultimately build great businesses, and some of those entrepreneurs will end up changing the world completely and build something completely new category. You're building a new category, right? As an example. But I don't think, I'm too old to be of the view that startups are always going to win. I actually don't believe that.
And if we think about, okay, startups competing, they've got the larger incumbents, but against each other, we think about carving out Prosper's identity with different marketing strategies or however you do it. How do you approach brand building and getting Prosper's name out there?
So very experimentally, I guess, is the high level summary. Because I think your brand ultimately is an expression of your values, and you hope it's like that saying of, people like you or people like us do things like this. So it's not actually about you, it's about us. So what you're trying to do is build some kind of emotional connection that you feel, you, Joe, feel like this company is for me, right? Which is non-trivial. It's difficult to do. And it also means that you have to really be clear on who you are for, because you're proactively deciding to not be for a whole load of other people. So like we had to be really clear. Like we get a load of people moan, why can't I do single stocks on Prosper, right, as an example. And we had to be really clear that we are not building a business for traders. Like that's not what we believe. So you have to ultimately stand for something, and what you're selling is what you believe in. And by doing that, there's going to be a bunch of people who don't like you, right? And you've got to be you. That's just.
But we don't sell.
We're not for you, right?
So who is Prosper for?
So we are for. Well, interestingly, so I can tell you who we market to, and then I can tell you who we attract. Because actually, I think because what we say is we're building for people, mission is to maximize our members' wealth, right? And so that you have to think about, okay, well, that if you're going to do that, the question then is, okay, how do you do that? And we've got three simple things. One is if you have cash, which everybody does, it's got to be on the best possible interest rate you can get it in the country. That's number one. So everybody has it. Number two is everybody also, although amazingly I interview people and they say they didn't realize that they were investors. When I remind them that a pension is actually an investment, it staggers me that people
when you're
don't
hiring,
know this. It's not when I'm hiring.
When you say interview.
But into customer interviews.
Right.
Like people who actually go, I'm invested.
Okay.
Like literally like I'm talking to them about from planet Mars or something. So, you want to be able to invest in the public markets, buying your big, Microsofts and Nvidias and whatever as cheaply as you possibly can, because everybody owns those. And you want to be able to access a broad range of things that offer you higher potential returns than you might be able to get on public markets in other things. So that ultimately, and because the third of those is only really open to high net worth individuals. And that's actually, when I say high net worth, a lot of people go, oh, you're only building for millionaires. That's not. So the actual definition, FCA definition, is £100,000 salary. So it's also high earners, right? So high earners, people with £250,000 or more of investable assets over time. So that tends to skew you older, because and by older, I don't mean 60, I mean 40, 50. Because you've accumulated wealth by that point. So we're building for the people who actually have money, because otherwise, if you're offering really low fees, doing that on really small amounts of money is really, really hard. You need to raise a gazillion pounds to do that. So we're trying not to do that. But actually, interestingly, we attract, I think, people who would sit in the, I don't know whether nerdy's a fair word, but sit in the aspirational bucket. So we've got customers who are, members of Prosper who are 20-something years old, and they're my true heroes to a certain extent, because they have realized what I realized much later in life about what is the best way to actually invest, and the importance of the fees that you're paying when you're doing that, and how not to be, taxed 3%, 2% of your net worth for the rest of your life with a financial advisor who doesn't do a great deal for you, that money. So all of that is pretty cool that they come there. And I think COVID, funnily enough, COVID and in your business, it would have been a genius if you'd have launched with the GameStop saga era. You'd have done good marketing. Yeah, it would have been fantastic. But a lot of those people who are in their 20s, who are on Prosper, actually started doing free trade. Sorry, I shouldn't really name names, but anyway, trading apps.
Yeah. And
put a load of money into there. And guess what? They couldn't beat the hedge funds with 190 million in capex a year and a 3 millisecond delay. They were not able to outtrade those people. Crazy. Lost a load of money, and then wanted to do something more that was actually going to build their wealth, as opposed to what is more of what was frankly entertainment, actually, is the way I would think about it.
And you mentioned the FCA, which is one of our favorite topics. So obviously working regulated spaces, gaming being one of them, but also predominantly more finance. Yeah. Especially at a startup, how do you navigate innovation, but also the regulatory burdens that you have to go through?
So the first thing that I would say is, so video games is not regulated. Gaming is, but differently regulated. And I haven't worked in that space, but I have quite strong views about that. But save that for another podcast.
Cool, when you come back. Yeah.
Save that for round 2. But I think as somebody who's come into a regulated industry, the one thing that I would say is that I think it's massively beneficial. And I actually think the FCA is a fantastic thing for the country, because now that I actually know the ins and outs of how people's money is protected, and you take Prosper as an example, it's the first question that anybody who's not in financial services asks me. How do I know that my money is safe with Prosper, right? And they assume that Prosper has their money. But when you start to, the actual regulatory regime means I never have their money. I might control whether, they press a button that tells me to move it from HSBC to Vanguard, but I don't ever have their money. And so I think there are, so if you take that as one thing, the principle of separating client money from the company's money is just brilliant for the consumer. And, you don't get FTX. That was the opposite of that, right? The crypto, he was spending the customer's money because he didn't split the two things. So I actually am a massive fan of the regulator from the point of view that it does a bunch of things that keep everybody safer than if they did nothing. And then, so then you got to say, okay, well, if everything that they're doing is great, how come a lot of the regulated companies are so bad, at dealing with regulation? And I would say that in that as a function, it's probably the function that we found hardest to find the right talent at Tandem, as an example. We had lots of people in that role cycling through.
Compliance risk, regulatory affairs.
Yeah. Well, we didn't have regulatory affairs so much that, but risk and compliance we did, and we had 3 lines of defense in Tandem because it was a bank. So that was the hardest bit, and the reason it was hard is actually what you needed. So nobody would disagree with the objective, which is that the customer should not suffer any harm, right? That's what I'm trying to do. I'm trying to keep their money safe. I'm trying to make sure they don't do things that really hurt them. So that nobody disagreed with that. It was in the layer of, okay, how do we do that? So, for example, one of the things that I think I kind of perfected it by the time I left Tandem, and I certainly, continue to use it, is the idea of embedding compliance into a digital product development sprint, so that it's not, because what the compliance function typically, and especially if you're recruiting them from a larger bank, they would want a paper on the outcome before you even started. And you can't, obviously, if you're doing iterative development, you can't do that. It doesn't work. So the whole sort of, how does compliance become real-time, responsive, part of the process itself? And I use probably the best way of doing that is to use the design thinking approach, where you're doing a how might we. So the how might we is a kind of a common design mindset of, stating a problem and being generative about the potential solutions, right? If you can find compliance people who can work within, so that the task is, how might we make it easier for people to log in, right? And as long as they can be like, no, you can't do that, no, you can't do that, no, you can't do that, they need to be of the mindset of, well, how might we do it then? Okay, well, we might do it like this. Great, fantastic. Give me 20 more of those that you're happy with, and then I can test them and work out which ones the customer is most happy with. Because guess what? What the compliance person thinks a customer is going to do the right thing for the customer, put it in the customer's hands, they have no clue what you're talking about. Doesn't work.
And also,
it has to be, it has to be iterative and joined at the hip and based on experimentation. And I don't know many people in compliance, and I would actually, if this goes out on your compliance things, I would say that is the one thing. If you want to future-proof your career in compliance, then I think it's going to be all about that. It's all going to be about your mental agility, your ability to solve problems. And that's frankly the more interesting than anything else.
And right? I think the willingness to adopt technology to keep you ahead, to keep
100%
that sort of flexibility in the way that you solve problems. Some of the compliance teams we work with are the best at that. They're very open to changing the way they do things to achieve a better outcome for the consumer.
What's the main hurdle then? If you put it the other way around and say what holds your guys back?
I think it's more behavior. So on the sort of, let's say we're dealing with a compliance team, risk team, or reviewer team, they are still trying to achieve sort of A to B. They're trying to review something quickly and safely. Yeah. But when you're dealing with different stakeholders that all have to adopt their behavior, whether it's legal or second line or marketing or product, there's new ways of doing things, and maybe compliance is seen.
So if one of them says no, then you're kind of stuck.
It's sort of like everyone has to collaborate and have the same design thinking or the same way of thinking, and that's not often that common, which is where technology can help, because you can show people new ways of doing things.
But that's not a technology, that's a culture problem.
It's a culture problem, but if you can give people the technology in the right hands and they're willing, that's why compliance teams are great, because they're willing to be open and they can kind of champion it internally and get others on board eventually.
Yeah, it makes sense.
So for any fintech founders that are thinking about starting a company, first time in the fintech space, would you give them,
as in first time CEO?
First time CEO or first time co-founder, first time founder, let's go with that. But they want to build a business, a fintech business.
Yeah.
are there any practical pieces of advice that you could give?
Sure, definitely. So I think certain types of investors have higher propensity to take risks on first-time founders versus repeat entrepreneurs. So I think if you need to raise capital, you have to think about what kind of people like first-time founders, as opposed to, actually, I've met quite a few who are like, what we like about you is that you repeat founders, serial entrepreneurs, right? And you just look at their portfolios and you see that. So there's no point spending time trying to get money. It's blood from a stone, right? So I think you know that is capital. Capital. I think there's a massive advantage to a first-time founder of having fintech expertise in the investor, as opposed to a generalist. Just because you're doing a lot of things for the first time. And if what's the biggest, think about what's your risk? Your risk is you're doing it for the first time. Okay, well, what are all the things that you might screw up? Make a list of those. Okay, I bet you one of them will be access to, people who've made the same mistakes, trying to do maybe not the same thing as you, but doing something in an adjacent space. They've got the scars that you don't have. What you really need is their brain to tell you what are the traps that I can fall in that I don't want to fall in, right? And I think the other one that I've seen too many times is people being scared about the regulator and feeling like they can't do anything until they're regulated. And it takes much longer than they thought it would to get regulated, and they've actually run out of money before they even can really evidence anything. So I think there is a massive argument for being an appointed rep as fast as you can, so that you can actually be in business. And the other advantage of an AR, although it's not directly within your control, so obviously Prosper is now directly regulated, and that has other advantages. But when you're starting out, I think it will build you a more a more thorough, stable base, and you're trading from day one as opposed to trying to wait. So I think that's a mistake I see too often in people just going, oh, well, we have to go and get directly regulated, and they spend all their time doing that, right? And all the investors' money's gone, but they have no evidence that any customer demand, right? So I think that's another thing. And then I think there's a particular we didn't talk about this, but you were actually talking about every founder has a certain thing that is their thing.
Leans a certain way.
Engineer, product, marketing, whatever. I think if you are a technical founder, in particular, and I could maybe do this the other way around as well. I think being a technical founder is much harder, because if you think about what you've got to prove in the early days, a lot of it is, just can you get traction? Traction is a sales and marketing. You can talk about product-led growth if you want, but it's actually about getting people to use your product, right? Evidence of somebody having this problem that you are sweating over. And I think it is really important in those early teams to find somebody who has a more commercial bent to them, to de-risk you spending all your time building amazing technology, but not actually proving anything on the people want it.
Yeah. Are you and Ricky both commercial founders? Or?
Yeah, definitely.
Okay. So you'll split those different aspects of sales and
marketing? We do. So we are both very different, actually. I am more sort of, I suppose my center of gravity is, I think that you have to deeply understand the customer's needs at a very deep level, and that is expressed through product and brand, product and marketing, product marketing. I think that's always the thing that comes first, because I just think it's too risky. If you can't build something that resonates with your customer and you're not asking the right kind of questions to get there quickly, that's tricky, you know. Yours is that you're a good example of somebody who I've seen do that well, from the point of view of, you come with a mental model of, this is how I think my business will get into a commercial relationship with this other business. A good entrepreneur will be able to react to someone saying, that's not actually what my business is, and we have different this, different that. And then you adapt, you go back. I think that is a more commercial marketing orientation, which is, it's kind of like the old, the original Wolf of Wall Street, sell me this pen. It's like that. You know, you're actually, the best salespeople are the best listeners. They don't talk at you, right? They listen to what it is that you need, and then they go, I've got it. So yeah, I think that doesn't always come easily to technical founders. And I think they probably do. If I were a technical founder starting a fintech company, I'd try and find someone who's really bloody brilliant at that.
So Nick, thank you so much.
Thank you, Joe. A pleasure.